Hey everyone, Scott Bauer again from Prosper Trading Academy. Today, I'm going to go over some basic concepts of options, exercise, and assignment. I'm going to go over what they actually mean, as well as some strategies involved in these concepts. So, let's get right into it. All right, everybody, we are going to have a discussion, a general discussion about exercise and assignment, and what actually happens at expiration with a position that might be in the money or close to being in the money with those options. So first off, we need to really understand, what does exercise and assignment mean? Exercise is when the owner of an option, and I'm just going to use option because it can be a call or a put option, when the owner of an option chooses or opts to turn their option position into a stock position. That's what exercising an option is. The owner of an option is exercising their right to turn it into stock. Now, that typically doesn't happen until expiration. There are a couple scenarios that don't happen often, but there are a couple scenarios why someone would exercise that right early. The most likely one being is if there is a dividend involved, but for the most part, it happens at expiration. That's what exercise means. Now, assignment is when the seller of an option must deliver stock to the owner of the option. Okay, so if you own an option, you have all the rights. You have the right to exercise it. If you are the seller of an option, if you're short an option, you have no rights. You have obligations. So if you get assigned, meaning the owner exercises their right, you get assigned, you have to deliver stock to the owner of the option. Okay, if you get assigned on a call, what happens? Then you have to sell stock at the exercise price. If assigned on a put, then you have to buy stock at the exercise price. So one of the things that I always recommend to people, if you are short an option, whether it's just a naked option, which we don't do in here, or as part of a spread, if you are short an option, the goal is to have that option expire out of the money or as close to at the money as possible. The question I always ask everybody is, all right, where do we want the stock to go? And the answer always is the short strike. And that's because at the short strike, if we're in a spread, that option we've sold, the short option, gets closer and closer and closer to zero, while our long options, the one we own, increase in value. But you gotta remember that even if an option expires out of the money, okay, even if an option expires out of the money, the owner of that option can still exercise that option into a stock position. Doesn't happen often, but if you have a stock that is, real close to a strike, real close to being in the money, so it's, close at the money, maybe the owner of that option wants to get the stock position. So if you're short, you are at risk of being assigned, even if you are just slightly out of the money. So what do I recommend? I always recommend to close that option prior to expiration, even for a few pennies. Take the assignment risk away. Put control back into your hand rather than letting someone else keep control. Okay, now let's talk about the actual exercise and assignment process. Okay, so what really happens to options at expiration? How does that process actually work? At expiration, the way that brokerage firms, clearinghouses treat options is that any option that is a penny or more in the money will automatically be exercised. Penny or more. It didn't used to be that way. When I was trading down on the floor, it changed over time. It was a nickel, it was a dime. Now it's a penny or more. But again, let's say, for instance, you are short an option. Let's say you're short Micron. You're short the 70 put, and the stock closes $69.99. So for example, let's say we are short the Micron 70 put at expiration, and the stock closes at $69.99. The option is theoretically in exercise. Okay, because it's a penny or more in the money. However, the person who is long that put doesn't have to exercise that option. Why would they want that option exercised? Why would the person on the other end, if they owned the 70 put, why would they let that go through and exercise that option if they thought the stock was going to do what? The owner of this option would exercise their right to sell stock if they thought the stock was going lower. Right? If you own a put, you think the stock is going down. So if I exercise my put, I'm exercising my right to give my put to the brokerage firm, and they in turn give me short stock at the strike price. So if the owner of that put doesn't do anything, the brokerage firm is automatically going to exercise that put. However, the owner has the right not to exercise that put. Because maybe the owner thinks that, you know what, stock's gone down enough. Or maybe, looking for a bounce. They don't want to be short stock at 70. We don't know. If we're the seller, if we're short that option, we don't know who the owner is on the other side. So we don't know what is going to happen. And the owner has the right not to exercise that put. So if we were short the put, meaning we were the seller, why take the risk of assignment? Okay, why take the risk of that assignment when it's not a certainty? Theoretically it is. When I say theoretically, that means that the brokerage firm is going to exercise that option unless the owner gives them what's called an exception notice. But why take the risk for a penny or 2 cents when we could buy that back, when we could eliminate all the risk by just buying back the option, whether it's for a penny, 2 cents, whatever it is? In my book, in my experience doing this for 30 years, the good far, far, far outweighs the bad to buy that short option back and not have a naked stock position that you wouldn't know if you did or not. You just get out. So there you have it. Exercise and assignment. Let me know if everything made sense to you, as understanding these concepts is an important step to becoming a more successful options trader. Please let me know in the comments below if you have any questions or suggestions for future videos. Also, remember to like, subscribe, and click that bell to be notified every time we upload a new video. Thanks so much for sticking around until the end, and I'll see you next time.